It's actually not difficult to see what TAUSDT is trying to do here. Ladies and gentlemen, welcome back to my live trading session. And I'm on TAUSDT. Guys, it took me a long time to even find a setup that is profitable, a setup that is high probability today. And even with this one, I still have my heart in my mouth. And I'm going to point out a few things that I am looking at here, considering liquidity and price delivery. Okay, I'm actually going to show you my thought process for this TAUSDT trade. So stick around. If this is your first time in my channel, please, I'm begging you to subscribe. Okay, I'm begging you to subscribe. I deliver quality content and I'll break down price action to you, how you understand it. All right, the best way you can understand liquidity and inversion fair value gaps and use it as an advantage when you are trading. So this is actually a live stream that you want to be part of. All right, so stick around. So we are looking at TAUSDT, and as you can see, we don't have much going on in terms of price action. It's basically price action from Monday, July 21. Is this a new contract? Monday, July 21, and today is Tuesday, July 22. Wow, I thought this pair has been around for a while. So, be that as it may, the thing about liquidity is that price goes for old highs and old lows and imbalances in form of gaps and relative equal highs and lows. So when I talk about gaps, I mean fair value gaps or inversion fair value gap. That's what gaps is all about. So what is a gap? A gap is actually when you are looking at three candles that are close to each other. So let me get my demonstration too. When you consider this candle with this long red candle with this long white candle or green candle, you will notice that there is only sell delivery. I mean, there is a sell side imbalance and buy side inefficiency because the price delivery to the buy side is actually inefficient. As you can see, there was no delivery of a week to balance this sell side. So this is a liquidity void. Okay, it is a gap in the market that needs to be actually filled up. All right, so it's a liquidity void, this one right here. All right, so when you are trading or when you are trying to frame your take profit or your stop loss, your eyes should be looking for these imbalances because they are the point in price that is likely to magnet price. It will make price to gravitate back to that level. This this fair value gap right here. So what we have as our fair value gap is the low of this candle. Let me actually use this to mark. No, let me delete this, no confusions yet. So the fair value gap is the low of this candle. So let me call this the fair value gap low. Fair value gap low. Then I will just click and drag. Fair value gap high. So what is the idea? The idea is just bearing in mind that this gap in the market has to be actually rebalanced. Okay, this gap needs buy side delivery into it, and when we are framing this trade, we are framing it with the mindset that price is actually going to retrace back into this level or this point in liquidity. All right, this whole low to this high is a liquidity void. So someone that is actually trading or looking to take profits may start taking profits from this high or this high. I'll tell you why this high is a probable place to take profit. All right, this is a relative equal high. In essence, this high is higher than this one. Okay, so let me quickly remove this one so that I don't make things cloggy. So I will take this high right here. Guys, this dotted line that you are seeing here is actually yesterday's closing price. So if you want to have this blue dotted line on your chart, you can right click on your anywhere on your screen, click on settings, and on the scale and lines, scroll down. You will see the previous day close. The previous day close is actually a very, very, very nice liquidity pool. All right, it is like a magnetic liquidity pool, and you have to learn how to frame your bias in context to align with the previous day close. So I use it a lot. I use it a lot. So, but that will be a topic for another day. I just wanted to like show you how I framed this inversion fair value gap trade. So let me quickly drop to the 15 minutes and point out this point in price. So let me call this a relative equal high. So this high is actually a weak high. Okay, it is like an open high, and it's literally asking price to come and take it out. I will demonstrate it in a moment. Yes. So I want you to observe this leg that took out this relative equal low, or this leg that took out this liquidity. So let me say sweep of liquidity. Liquidity. I like to see my inversion fair value gap come inside the leg that swept a major liquidity pool. Okay, so what I'm saying is that when price takes a low, when price takes a low, that means when price takes this low right this here, I like to see inversion fair value gap. I like to see a bearish fair value gap here inside this leg that took this low. And you know that once price closes above that inversion fair value gap, no, fair value gap first before it will now become an inversion after the price closure. I will expect price to tap into it before targeting the extreme part, the extreme liquidity. So if you have a break of structure here, that means in form of liquidity hunt, trap, or what was that? ICT call it turtle soup. Other school of thoughts call it liquidity sweep. But I want you to understand that once price takes a low, this low is preferably a higher time frame low. It's not any low that you see that you mark out. You make sure that it's like in the higher time frame, because this has to contribute to the probability of your trade. So marking out your lows in lower time frames, not higher time frames, it will actually reduce the probability of your trade playing out. So inside this leg that took this low, we are going to be looking for our inversion fair value gap here. Okay, so this is the leg that usually have the inversion fair value gap. It's a fab or gap. So this is a model, classic buy model, and this is the relative equal high right here. Buy side liquidity, relative equal high, uh, or anyhow that you choose to call it, depending on your school of thought. This is what it looks like: a high that is open, literally waiting for price to come and take it out. So this is what our model is. And if you bring this model right here, you will see that they are the same thing. You see that they are the same thing actually, because once price swept this low is this low. Once price took it out with this leg, so from this high to this high is actually from this high to this low. Sorry. So from this high to this low is this high to this low. When it took out this low, an inversion fair value gap was formed. So now let us zoom in. If we actually zoom in, we are going to see, let me remove this. If you actually zoom in, we are going to see that price, when it took out this low and gave us this nice fair value gap from, let me remark this, gave us this fair value gap from this high to this low, was a fair value gap. So this fair value gap was actually invalidated and turned to an inversion fair value gap once price closed above this one, the low of the inversion fair value gap. So this is what we are marking out. We are marking out the low of this candle. Don't lose your money, oh. Don't lose your money. Mind how you analyze your market and know when to trade. Okay, I'm just trying to point out this setup because it was the last trade I took today. Yes, it's the last trade I took today and the only one actually, because the first one did not get triggered, so I had to close my position. I had to cancel my order rather. So being that we have marked out this point in price, I needed to make it clear. So I will just use my rectangle to place it on this one, to this side, and we have a nice little dotted line in the middle of the fair value gap, which is the sweet spot. I prefer to call it the sweet spot because that is where the real price action happens. But nobody tells you the midpoint of an inversion fair value gap is where the whole magic happens. It's where the whole magic of price action happens, and you have to be familiar with it. Okay. If you continue to look for it every day, you get conversant with it, and who knows, it may turn out to be the model that puts food on your table if you learn how to do this. Guys, do you know the most profitable time to trade an inversion fair value gap is actually the New York morning session. It is the sweetest time of the day to trade inversion fair value gaps. Believe me, it is a sweet time to enjoy this strategy, and it works like magic. Okay, so this gave us a premise to start framing buy positions once this candle closed above here. All right, now this low was the first uh premise. Okay, now the second confluence is the close of a candle which is actually bullish above this fair value gap. So that's like the second premise. Now the third premise is that we are convinced that price actually created this high before taking this low, and within this price range or dealing range, all right, there is still chance for price to continue gravitating to the upside, because even though this high was taken here, it was taken here, and this high used a kind of a swift liquidity sweep to take out the low of the range too, and created an inversion fair value gap, a fair value gap rather, in the process, before turning it into an inversion fair value gap. So we are expecting price to hit here as our first target and here as our second target. But I would like to collapse all my positions with the the premium week of this price delivery array. All right, remember this is classic resistance. This is classic resistance. All right, so if you are actually bullish and you take some part of your profit on this candle, maybe 70% of your profit, you might decide to let others run right into the midpoint of this week. Weeks are actually very nice price delivery arrays, so you need to also get familiar with weeks. You need to get familiar with dealing with weeks. So if you are actually streaming this and you are seeing a low quality video from your phone, you know you can actually make it brighter by clicking on the settings icon on the top right of your screen. If you click on it, you will choose higher quality picture, and you are actually going to see my chart clearly. All right, YouTube is automatically putting your video in low quality mode. I assure you, it can be changed. Just click on that settings on the right hand side, on the top right hand side, and choose high quality, and you'll be there. All right, so let us go back to the let us go back to the 1 hour chart, because